Okay, the stock review is for Tuesday, 28 February. We will start with the overall market. Pretty simple story in the overall market. With a gap down below this controlling up trend line, we tailed down once again, went back above it, went to new highs, new 11-year highs on the composite, but came back and closed either on or perhaps even below this controlling trend line. This may be a second close below it. This is the first. They're not in close proximity to one another. This is likely going to just be channeling some more here sideways. What we have from the market is definite potential to be able to go on higher. Let's see where I want to do this. We'll do it with this chart. Yeah, we'll do this chart. Put 10-year on this. Don't want to keep Broadcom up. Actually, we need a little bit longer than that, I think. 15. Here we go. As you can see, this is where we gapped above. We gapped above these levels. This trend line through here is, I think, one that's going to be. We're referencing it right now. I've talked about why this one I like this trend line and think this may very well could be a start of a retracement. We've come back up to it. We could fall over from here. The market at the end of the day today was, interestingly, did have this kind of thing going on, lower lows and higher highs, and it began the slide in the afternoon, or the direction in the afternoon was down. So you see here, we did fall below these prior tops, so we did not close at a new high, although we did once again have a new high, as you can see here. But we're going down, and tomorrow this widening mouth instability could just resolve and we plummet on down, go below that trend line. This does look like a close below this trend line, and downside tomorrow. We'd have to have a nice gap up, a very strong gap up to be above it, or at the open. And opening below this trend line tomorrow could actually be rough for the market. You see on this day here, we opened below, went right back up. The next day we gapped up solidly back into this channel. Today, however, we gapped down again, went back up to it, closed right at the line. Failure to gap up into the channel again, just like this day, could very well signal some downside. We come back down, we start to channel, perhaps start a top over movement. Really depends, but certainly we've slowed down, beginning to break important trend lines on the market. However, we could have an extra shot up to 3,000. 3,000 is not far away on the composite. People may want to juice it there. So, we might have an extra gas to go on further up. This movement here is akin to some of this action that we had. Where are we at? Let's do this. Here we are. This last movement up. We've moved at approximately the same distance here as we did with this movement here, but you see the pullback began on a move higher to new highs. So we've got the move higher, the sustained movement to new highs, and we might need another thrust upward. Dow or composite hits 3,000, and before it was able to come back. So that's very possible that the trend line's important tomorrow, but we could still go higher. So once again, this is definitely got to watch the open for this trend line if we're going to touch off of it, have a double top perhaps on today's highs, because you can see the highs of the day were late in the day, so it kept trying to go higher and succeeded, but then it crashed right back down for 70% of its movement back up. So that's pretty unstable. If we're going to go down for tomorrow, this would be classic widening mouth instability. Reverses the trend, which is up from the opposite edge, and just crashes through that other boundary for a big retracement. So we could have a big down candle tomorrow below that this little controlling trend line. And you see we've got an uptrending bound that we did go above today, could not stay above it. But these wicks that were ascending, much lesser slope than a lot of the than the other action we've had going up at these slopes. You see the slope petering out as the days go. This slope, this slope, this slope. We've got a lesser slope. That's a good recipe for a nice big hook down. And if we have that weakness early tomorrow, it could be a really big down day. Okay, so that's the market. Broadcom opened on 36, fell past 36 again, went very high, hit 37, came back down, gave it back right to 36.50. So complete dithering between 37 and 36, but it was beautiful today. This is Best Buy actually. Okay, I'll talk about it later. Broadcom. Beautiful trading, absolutely gorgeous, easy break line entries all over the place. This is one we didn't catch. Did catch this one right here because I was frustrated about missing this down. But this was so easy, it's just not, it's kind of criminal. Same for this one here. I did catch this down. Got lucky, had a conditional order in, and it hit right on the target of 25. Beautiful. Executed 27. Came right off of that, went on back up. This was really nice. Could have taken this up and down multiple times throughout the day. Just beautiful. Anyway, this one right here was the key trade of the day. Breaking back above 36 for the second time. Breaking this downtrend line for this extension after this reversal. So we had a reversal in cradle and movement back in the direction of the primary daily uptrend, and I would say Broadcom still has a very strong primary uptrend for its movement. Primary movement is up. So that was a reversal into the direction, back into the direction of that uptrend. And here we have some controlling lines that we are breaking through, though. So Broadcom has the potential to do any number of things on a given day. But this is a decently strong candle. We could come back down to have to hit this again, however. This is a big give back, although this was quite strong to get up to 37. The market didn't give back as much as Broadcom did, so Broadcom was weak on a relative basis compared to the market, as you can see on this 2-minute chart. Here's today for the market. So it gave back more than the market did. However, so it might be vulnerable downside to hit back to 36 if the market's weak and wants to come on down on this widening mouth instability if this breaks down. Alternately, going back above some of these levels here, I'd say going back above today's trend line like this on the 1 minute, starting to break back above this level, catch some wind off of 36.75, 36.70, whatever that is. By the time that happens tomorrow, you probably could have some good upside from Broadcom. Broadcom has retraced very quickly for a nice little hook over, kind of a candy cane movement here, or a hook, J-hook, whatever you want to call it. And from this quick movement down, we're getting some nice movement back up. Could very well just have a nice movement back up to recover more of this tomorrow. Like I said, Broadcom is in an uptrend line. Is in an uptrend. So watch these lines here. Once again, your levels are 37 and 36, and today's close 36.50. So this 3-stage level area thing for the action for Broadcom. Probably a little bit too much analysis on that. We'll just move along. SanDisk story is very simple. Maintaining the uptrend after its breakout of the downtrend created by the gap down for earnings. You see this uptrend that it can be drawn through these two tails off of this really nice candle here, and this failure to go lower when it really could have on this day, reverses upside, it's green after that, sets another tail with another rejected opportunity to go lower. Very nice. Wicked off of that today, went on higher and started to move toward 50. Did close above 49. Very nice. We get some upside from the market tomorrow. You'll hit 50 tomorrow on SanDisk, I think, if there's some upside from the market, or at least a nice movement toward the upside, and SanDisk is strong. The market could fall, SanDisk be strong, the market take a move back upward, and SanDisk decide to use that to head to 50. You've got this uptrending line. This is a increase. Slope is getting better through each of these wicks, so it's forging higher on each attempt to go up and make new highs. Those are increasing in their levels through this region. Yeah, maybe get a really nice movement up tomorrow. Try to go for gap closure, or at least come up to 50, which is not far away at all. And it could move on through that. Depends on the market, the open. I'd say this is your controlling trend line right now for the downside, the one it wicked off today. Clear all that out. What else might there be? 49 would clearly be a key level off of this wick and this close, or open rather, right through there, as you can see. So that's SanDisk. Let's see. We'll go to Netflix. Netflix gap down. This may have been due to some to the fact that tomorrow, Tuesday the 28th, Netflix is losing all the Stars movies. That's over 1,000 movies from their streaming service, which will suck for me since that's all I have. But anyway, there's not that big an impact probably to Netflix, but that might have been part of what was going on here today. You can see that this is the uptrend line off the gap elbow before it happened that we broke and have been below. Been in the gap region back here is where now we're trading. And if we were to draw another trend line through here, that very well could be a new controlling trend line, something to pay attention to tomorrow. It's bouncing between 110 essentially and 108 was the lower bound here today for the most part with Netflix. Here's your 110 boundary. Here's your 108 boundary. So you can see nice range in between there. Constrained for the moment with an uptrend right here that it maintained. Came below it, but back above it while the market was being crappy. Did not go back below it. So this may be your controlling uptrend. You've got parallel structure right through all of this, as you can see. So draw those lines tomorrow. Pay attention to that. You've got this downtrend that it broke and went above and looks like it's wanting to be. You've got multiple structures here showing off of these parallel channel lines. Carry those over into tomorrow. See where we open. See what your boundaries might be. Knowing that for a stock like this, that has a potential to move the way it is. The main levels, the even levels, 110, 109, 108, they're always going to be important as they make approaches to those round numbered levels. So that's Netflix. Could do any number of things tomorrow. Okay, move on to X. Wrong side of the charts. Here's X. Opened on the controlling uptrend, the bottom uptrend since October. Did have to go below it once again. So this is two days of the last three. It has lived for a period of time below this uptrend. Didn't quite match the performance the last time it did this. It had a bigger snapback. Went down further, but had a bigger snapback and closed a little higher. It closed a little lower than both yesterday's close and that third day's, 2 days ago. So these closes are, getting worse. The high here was slightly worse, and so if we're going to live below 28, the real problem here is that 28, which has been a key level for X, extremely important level. It is now coincident with this uptrend line. 28 is all important to X tomorrow. I can't imagine it might have the ability to stay around 28 for a small doji, perhaps, where it doesn't really decide anything tomorrow. More than likely, however, the open and 28 level with this line will mean everything to X tomorrow. So those are the lines to pay attention to, whether it bounces up because this is a two green candle perhaps bounce, and you begin to break the downtrend line perhaps. Here's the latest downtrend line. Perhaps you break this to the upside, break both of them, get a real nice candle move up to 29, 29.50. Maybe it's really big tomorrow if the market wants to pop. Who knows? But clearly you can see we're kind of at a cusp timing for X, and it could be very big. Like this here, this wedging, interacting with these MAs, and this uptrend back here on X. It's moving into the tip of this wedge, and boom, there you go. You've got yourself a resolution off this trend line down here, and was very big. Something like that could very well happen tomorrow, and it would be with probably this downtrend line here, or right from the beginning. Depends on the open. Take a look at that. That's going to be X could be very, very big movement tomorrow, and early. What else? What else is interesting? A few things. FedEx put a real nice candle together off of its big long-term controlling uptrend line, and that's basically off the 50 and right above the critical level of 90. You can see all this action has been above 90 after it went above pretty quickly based on earnings. I think this was earnings generated final movement to begin this rise. And FedEx has been doing very well in the daily pattern. Very nice movement up. Get a little longer term chart. Here's the 10-year, and you can see it may just be needing to retrace, pull back, and then move on higher to 100, past 100 to 105, etc. Perhaps. FedEx has been pretty good, not as good as some, but this movement from 85 and up was pretty strong. That may need to keep going up. That may continue. Although we do have a lower peak, and this is now a downtrend through this region. So perhaps that's not the case, and FedEx really is damaged. But today was a pretty nice performance from FedEx. Went early and fast, and then was pretty strong throughout the day. Didn't really get weak until the very end, the third movement down from the market to try to give some back. So FedEx could be interesting tomorrow. Apple almost closed at its ridiculous wick high from this huge drop day we had in the market through a really big movement down. Apple was a big part of why that was so big, because it is heavily weighted in the Dow, it's the Dow. Yeah, I think it's in the Dow. Even though it doesn't make any sense. S&P 500, that's it. But anyway, you've got this uptrend line here that we were below slightly today for a period of time and quickly reversed back above 520, which is always going to be a key level. Each of these $10 increments are important for Apple. 500, 510, 520, with something moving like this. So back above 520 and boom, there you go. I think this get up here to 530. How high did this go? Yeah, pretty much up to 530 on Apple. So passing back 520, you hit 530. And once again, there's no top on Apple. You just don't know how high it could go. So it could continue. Could continue up. Anyway, hit, I guess, not quite so high, 528.73. So it didn't quite get to 530. Apple could be very interesting. What other ones? For the downside, V might be quite interesting. This could be a real hook down. This big candle up to confirm these highs, since V is at all-time highs with this gap on earnings. Here's the MasterCard earnings gap. Here's V's own earnings gap. It's maintained that. We have an uptrend line here on this, but you can see today's candle was a little red, essentially doji, but a red candle down, not much movement when the market was screaming upward. So not good. If the market's weak or bad tomorrow, get a proper open down below this, or a failure to go higher and just move through. This is wedging here after a real nice uptrend movement. Kind of a failure to go higher. Today was really disappointing if you're wanting V to go with the market. It didn't do jack today. So falling back below that, falling back below 116, you get a real nice substantial candle down. Might come all the way down to 114. Be really nice tomorrow, perhaps on the downside. V is very vulnerable. And then let's see, AXP was a real champ today. Blasted up with the whole market. Didn't give back what the market gave back. A little bit less than that, right above 54. AXP is looking really nice. So stack another candle just like that on top tomorrow. The market's strong. Perhaps. Here you can see that it broke its resistance, this downtrend movement with a gap, maintained it, and then just got going, and today confirmed its presence upside. So here's your line through these tops. Drawing lines really sloppily tonight. Here we go. So you can see we just go rack above 55, 56, 56, 50, whatever this is going to be. Could do that in a single day, perhaps. That would be quite a candle, be very nice. But AXP looking very strong. So those I think are the most interesting things. Let's see if there's anything else real quick. Best Buy is vulnerable, I would say. This looks pretty rough for Best Buy off these 2 wicks here. This could go either way, but this looks a little weak. Closed right at 25 today, so 25 is going to be key for Best Buy tomorrow, and it's looking a little vulnerable. I'll just say that. This slope here, the top slope that it pulled away from, is less of a slope, less desire to make new highs than this controlling uptrend, this bottom trend slope here, coming up here. So perhaps Best Buy needs to come down and actually touch this line. Don't know, but Best Buy is kind of in a vulnerable position, and it's been behaving rather nicely during the day. But you've got these 3 levels through here that are going to be important for Best Buy. the tops here. This is the bottom where it went, and today was right at 25. So these will all, of course, all be key. And we've got a real nice downtrend moving into tomorrow. That living below 25, it might close the gap with a gap down and then start heading back down. This trend line right here could be very important going into tomorrow for Best Buy. That's it. Those are the most interesting things to look at tomorrow. So that concludes this report. Good luck trading.